Alright, you guys, let's get into this video. Believe it or not, I've been up for like the last 3 hours just trying to figure out how to get everything to work right. So if you guys would be kind enough to hit that like button, I would greatly appreciate that. If you guys would be kind enough to hit that like button, I would greatly appreciate that. Alright, just going to do a quick audio check before I start this video. Don't want to be talking for too long and not even knowing if I'm talking to anybody or not. Alright, seems like my audio is working really well. Alright, so it seems like my audio and everything is working really well. So today I'm going to be back testing a little bit with the NASDAQ E-mini futures chart. And then I'm also going to be looking at some crypto charts as well. We're going to go look at some Bitcoin, some Ethereum, some Zcash, pretty much whatever you guys comment down in the chat. Any chart you guys want to look at, by the way, any chart you guys want to look at, just leave a comment down below and we can definitely go take a look at these charts. As you guys know, today is Sunday. Markets open back up at 6 p.m. So, you know, typically what I do on the weekends, I like to look at the charts. I will be honest with you guys. I'm pretty much a trading addict at this point, right? So I love looking at charts, right? My girlfriend, I'm pretty sure my girlfriend would agree and she would say the same. She would say he loves looking at the charts, right? I'm addicted, but this is how I became, you know, a pretty decent trader. All right, so this is my E-mini charts, you guys. This is the NASDAQ, and I know what you're thinking. Off the first glance, right? We are on the daily chart. Off the first glance, this chart looks horrible, right? But if I delete this chart, you guys can see that on the daily time frame, we kind of been stuck within this one little range right here on the daily time frame. Right? All right, so we've been stuck in this range. We're not really looking to break out just yet, right? We have some equal highs up here, and then we have some liquidity that's building in the form of like a, you know, as retail may call this, like a bear flag or a bull flag, some type of flag pattern. I don't know, right? But essentially we have some liquidity building up here up top, and then we have some liquidity building down low on on a daily chart. Let's go take a look at our weekly chart. On the weekly chart, you guys can see right here, we've been pretty much consolidating for the last, you know, 4 to 5 weeks. We've been just stuck in one little bit of a range. And then we can quickly take a look at the monthly chart as well. And you guys can see we did create a swing high on the monthly chart. Right, we did create a swing high on the monthly chart up here. And that is going to be very significant because on the monthly chart, you guys can see that the NASDAQ has been just going up for the last, you know, 7 months, right? The NASDAQ has just been flying, all right? And it hasn't really had a real correction, a real pullback. And when this typically happens on the monthly chart, right? When we finally get a swing high that's made right here, right? All of my drawings are back on there. You know what I'm going to do? Let's use a different chart, because what I'm going to do for you guys, I'm going to bounce around from 2 charts, okay? because I want to be able to give you guys a fresh chart. All right, I'm pretty sure what this, before I delete this, let me make sure it's not the chart that I'm actually using. So it's not the right chart, it's not the right information. So let me make sure I grab the chart that's giving us the right information. You know, actually this one is going to have to do. What I'm going to do is, I normally keep this chart as backup, but I am going to remove all of my drawings just so you guys can have a clean chart. And then the main chart that I use is this chart right here. All right, so I'm going to remove the drawings on my secondary chart so I can be able to give y'all a live breakdown. But I'm going to kind of like go back and forth so you guys can actually see what I'm looking at in real time. All right. But as I was saying, right, we finally created a swing high up here on a monthly chart. So eventually what we're going to be looking for is we're going to be, you know, using our Fibonacci tool to measure out this range from swing low. All right, swing low is down here, and then swing high. So now that we have our range, eventually we're going to be looking for a price to come below this yellow line right here, which is the 50% level of this monthly range. Now, obviously, we're on a monthly time frame, right? So this can take some time to actually play out, right? But we have, the first thing that we have obviously is this fair value gap right here in the discount zone, and then it's also right on top of these order blocks, right? These two red candles right here makes an order block. All right, so that is a quick analysis on the higher time frames. And then now we can kind of like go down. I'm going to remove this because I really just want to back test what happened this previous week, right? So when I'm back testing, first thing I'm going to do is I'm going to try to put some lines on my chart so when I drop down into a lower time frame, I really don't get too lost in the sauce, right? So you see, starting from last Monday, which was January the 12th, right? I'm going to put a line on all of these right here, these daily candles. Then I'm going to change these lines, right? And this is pretty much how I back test. I'm not saying this is the best way to do it or anything like that, but this is just a way that I do it, right? So I change these colors so that, you know, I can know where I'm at. We can even make these a little bit thicker. Purple. All right, we can make these a little bit thicker, and then we could just also lock them on the chart just so we don't have to keep playing around. All right, so we lock these on the chart. Now, what I should have done before I even did that, now that I think about it, but let me see, maybe I don't have to delete it. Oh man, I'm gonna have to delete it. We're gonna have to do this a different way actually, because I need to show you guys the swing lows and the swing highs. I mean, not the swing lows and the swing highs, but pretty much the daily low and the daily high. And I can't really see the top of my wicks with these big lines on here. Okay, so what I'm gonna do instead, right, here's another way you can do it. When you're back testing, you can put a horizontal line and then you can label it, right? So I'll say Monday's high, right? Because when we're back testing, we're going to be looking at the liquidity. Monday's low right there. When we're back testing, we're going to be looking at the liquidity. So we want to be able to see be able to keep up with everything, right? So Tuesday's high. All right, we can label that as Tuesday's high, make that orange. And then we're going to look for Tuesday's low. And by the way, you guys, I did have a green week this week. It was a bit ugly because Thursday I pretty much almost took a max loss on my prop firm accounts, but I was able to get it back Friday. So I ended up having a green week, but you know, I'm just always trying to do better. And then, okay, we can label this. All right, let's label this Wednesday's high. All right, Wednesday's low. Drop a comment down below if y'all had a good trading week, or if you guys, you know, want to talk about y'all trading week or anything like that. Let me know y'all results. Let me know if y'all need help with anything in particular, anything y'all want me to go over in this video. Don't be afraid to ask, man. Thursday's high. Thursday's low. And if you are watching this video on the playback and you want to fast forward past all of this, please feel free to fast forward past these parts right here. I just need to label this so I can keep up with everything as I'm doing my breakdown, right? Cool. So now that we have all of our highs and lows on the daily chart marked out, right now we can start going into lower time frames. I'm going to just start off in a 4-hour time frame, right? Because that's what I would normally do. Matter of fact, let's go back to the daily real fast, because there's something I want to show you guys on the daily time frame. All right, so looking at this week's price action on the daily, right? You guys can see right here on this Monday, right? This little candle that we have right here, this big green candle, that's a pin bar. You guys can see we started off Monday going up into this liquidity is what it seems like, because this candle opened, I believe, right here, right? So coming off of last week's price action, right, we swept some of this daily lows right here. We swept this lows, and then we had a rejection candle. Price rejected up, and then we started to make higher lows going up until Monday, right? So let's drop into the 4-hour chart. Okay, so on the 4-hour chart, this is our Monday, right? This is our Monday. So you guys can see right here. Let me make sure I got everything looking good. So this yellow line up here was our Monday's high, right? Then you guys can see as the market was getting ready to open, we came up here, we swept our daily high. Then we started to move down. Let's go into the 1-hour chart so we can see things just a little bit clear, a little bit more clear than what it is right now. All right, so now we're looking at Monday's price action right up in here. Remember, this yellow line right here was our Monday's high. So the candle that I have my vertical line placed on right now, this is the 4 a.m. or the 4 p.m. candle on Monday, right? So this high was actually put in afterwards, right? So let me see, we might even have to go back and look at, go back to the daily chart. Let's go back to the daily chart, and then I'm going to put in, let me just put in Friday's data in there as well, Friday. So now we're on the 1 hour chart. All right, and we are looking at the 9 a.m. candle on Monday, right? So this was our, I'm gonna put a vertical line right here at the 8 a.m. candle. So what I'm gonna go do now, you guys, and you guys can see I have my iPad put up right here. I want to go into my trade locker so I can show you guys pretty much all of the trades that I took, so you guys know I'm not just like doing a random back test. I'm going into my trade locker right now. Let me see, Monday. Where is Monday? Did I place a trade Monday? Monday was the 12th. Okay, it don't look like I placed a trade on this account, but I thought I placed a trade Monday. Maybe I didn't. Maybe I did. So let's just back test. All right, I'm trying to get too fancy, you guys, but I don't want this video to be too long. I was going to actually show you all my actual trades, but because I trade on so many different accounts, I knew it was going to take way too much time to do all of that. But so let's just read some price action in here, right? So this is what I would have looked at going into Monday, right? First thing I would have looked at is this wick right here. And the reason why I would have looked at this wick is because this is a clear sweep on liquidity right here. And we are on the hourly chart, by the way. So the market clearly swept liquidity right here. And then the other thing I will look at right here is this little area right here. This is a fair value gap on the 1 hour chart. So we can box this up like this. Right. And then the other thing I would look at is that, you know, we made that displacement going down and then the price broke above, right? So once it closed above, that's immediately telling us that, you know, price is going to want to be bullish, right? So now when the market gives us a retest, what I would do is use the wick, right? I would use this wick on the 1 hour time frame, right? If you measure this wick out, you can see that price came up in here and they respected this wick, right? This wick pretty much held price up. That's how I will look at this, right? And then on a 4 hour chart, I'm pretty sure the wick probably looked more significant on a 4 hour chart. All right, so you can see it right here on the 4 hour chart as well. It's pretty much this wick right here. And then some people may have looked at this and seen this order block right here and maybe used the order block. There's nothing wrong with that as well. But regardless, your stop loss would have had to been at the low of this wick, right? If you was going to be looking to take that trade. Me personally, I only trade when the market is open. So because this was a 3 a.m. type of deal, this was like a London session type of move, I would have never taken this trade anyways, right? But if this would have happened during the New York session, I would have for sure have taken this trade 1000%, right? But we can use this to read price action going into the New York session, because that's the only session I trade. I pretty much gave up on London. I gave up on the Asian session. But this year I'm really focused on being extremely disciplined and cutting out all of the fat, so that's going to look like not trading the Asian session. That's going to look like not trading London, right? Not trading pre-market. I'm trying to be extremely disciplined. And that is why I was able to, get another funded account with FTMO. And I did that within 11 days, just in case you guys wasn't aware of that, right? So, going into the market open, right, we are on the 1 hour chart. Price, as soon as the market open, price comes down here, sweep liquidity, have a rejection. This is at 9 a.m. right here, right? And then price closes. All right, this 1 hour candle closes at 10 a.m. All right, so now you pretty much already aligned with the market to some degree, right? You see that we swept liquidity, but we wanted to make a rejection. But it seems to me that the next hourly candle came down right here again and swept this liquidity one more time. And we're going to drop down to the smaller time frames so we can take a look at that, right? Let's go into the 5-minute time frame. You know what? Actually, I want to go into the 1 minute because I actually love the 1 minute time frame. A lot of people don't like it, but I love it. All right, so this is going to really give y'all some really good information right here. Right, this little bit of liquidity, because this is how I like to watch my chart in the real time. I'm on the 1 minute time frame. So once I get everything already marked out, I'm just going to pretty much be on a 1 minute time frame. And then my actual chart, right, I can pull that up for you guys and I can take you guys to the exact, right, this is how my actual chart looks. Look on the 1 minute time frame. Let me make sure I lock everything up. All right, so we are right here, I believe. Here we go. All right, so this is the price action we're looking at on the other chart. So leave a comment down below. Do you guys want me to use go back and forth so I don't have too much clutter on my actual chart? Or do you guys just want me to use my actual chart to do this breakdown? St. Judas said, count to the 8th bar and create a line on the high and low of the single 8th bar. And if of the bars going forward, break that line, that means there is likely going to be candles going in that direction. So count the 8th bar mark. You're good to buy in that direction. If it goes in the opposite, that means you should buy in the opposite. I'm a bit confused on what you're trying to tell me, St. Jude, but I appreciate you for leaving a comment, right? Appreciate you for leaving a comment, right? So on my actual chart, these are the things that I use, right? But I'm trying to give you guys kind of like a dual breakdown. So for me, I'm using all of this information as well. Once the price comes down here and hit this opening range gap, right, and then it bounces off and then it starts to teeter like this, I'm automatically going to know like price is going back up, right? The only thing I have to do is decide where could price want to go. You guys know I made a short, and I told you guys to put this new week opening gap on your chart, and I told you guys to leave that new week opening gap on your chart, right? So I will be using things like that as well. And then when the market is getting ready to open in here, right, this is Monday, you see the market opens, sweeps this liquidity, and then it fly up, right? So, if you don't catch this trade, you might not even be able to get a chance to, buy this at all, right? You just may miss that entire trade. Your next option will be using this, fair value gap from the 8-hour chart. This is all the way from the 8-hour chart. I've had this on my chart for a long time. You guys can see that the market respect that. Then it bounced back up, right? You guys can see that the market respected that, and then we bounced back up. So you could see why I didn't really want to use, you know what, I'm just going to use my chart. Because these charts are starting to look different. Right, so a day like this is, like I just told you guys, I missed a trade on my trade locker, and it was most likely because, you know, this market is taking off really fast. So a lot of the times I like to wait at least, you know, 30 minutes until the market is open to take my trade. So I think I definitely remember getting left on this Monday, right? And then I'm pretty much done trading at 11:30. Right, so days like this, I probably would have missed that trade. But just if you're using, you know, the simple concepts that we use, which is like fair value gaps, inversion fair value gaps, at least you would have been on the right side of the trade. Right, going back to that 1-hour chart. Going back to that 1-hour chart, we said that, you know, this gap right here, which is also first presented fair value gap, but this was a 1-hour fair value gap right here. Price broke above that and used it as support, inversion, right? So days like this is real simple. All you have to do is look at the daily, right? Figure out what is the daily bias. Did we break out the top? Did we break out the bottom? Even if you don't have a clear daily bias, you guys can clearly see if you look just a little bit to the left, right? We swept a lot of liquidity right here. We had a sharp rejection. Price went all the way back up, came down, created a fair value gap and an order block, right? These two green candles is an order block. So once price violates this order block, based on what ICT teaches us, right, the top of this order block is going to be a stop loss. So once price goes above that, it has already violated that order block. So that's another sign that's telling you, hey, prices are going to likely be going up. Because when price is going down, it tends to respect, you know, PD arrays that are going to continue to hold price down, right? So if price was going to keep going down, this order block would have been respected and then price would have kept going, right? So you can use this information before the market open to kind of get a sense of where the market is going to want to go. You know, we have some liquidity up there, right? I don't know if you're going to be able to hold for this entire move, but you know we have some liquidity up here. Then you also know that we have a fair value gap up here as well. All right, I'm going to delete some of that. No, I'm going to keep that. Delete this. So Tuesday, now we jump into Tuesday's price action. And right off the rip, you can see Tuesday is a bit choppy. It's not really doing much. And that's why, you know, last week, it was a tough week. I somehow managed to make it out and finish and have a green week, but it indeed was a tough week for sure. So Tuesday, our 9 a.m. candle, we're going to put it on 8 a.m. We're on the 1 hour chart, right? So as you guys can see, Tuesday, when we're going into the New York session, let's put it on the 7 a.m. chart. We have a high up here. Price goes up here. Sweep this liquidity. Hits the midpoint of our new day opening gap from December the 11th, 2025. And then we start to break away from that. So if we go into our 1 minute time frame, I'm pretty sure we will be able to find a trade off of that, right? If we waiting for the 9:30 open, right? Because I don't really like to trade pre-market. I like to trade between 9:30 and 11:30. Those are my times, right? So I think I did get a good win on this day. I think I do remember this day. So right up in here, we sweep liquidity. We have a little rejection. We use this new week opening gap for support, right? A couple of times. All right. And then as soon as the market opens right here, this is where we start looking for information, right? So what I use every day, I use the first presented fair value gap. I would have boxed this first presented fair value gap up just like this. All right, this is ICT silver bullet. All right, so this is going to be ICT silver bullet right here. You guys can see price broke above this. Acted as if it wanted to sweep this liquidity again. Came short. Broke down. Right? Nice little red candle on the 4 hour. I'm sorry, on the 1 minute chart. And then we started to use this first presented fair value gap as resistance, right? So you can obviously take a sell from there. Let's say if you get in at the low, I would at least put my stop loss right above this candle right here. And then I would try to go for a 1 to 2, a 1 to 3. And if you would have went for a 1 to 3, your trade would have looked like that. And it would have taken about, let's say if you get in real early, you get in at 9:47, or even if you got in at 9:55, maybe even if, let's say you like to wait until after 10 a.m., right? So let's say you get in a little bit late. Even if you get in all the way down here, put your stop loss up in a safe spot, right? You can still go for a 2 to 1, even if you get in late, right? So this is a good 2 to 1 opportunity right here. But you're probably not going to catch the whole move. So either you get in late, and then maybe you try to hold for as long as you can. But even if you do get a really good entry, you probably still won't hold for the entire move. I just want to show you guys the risk to reward right now, showing you that this is a 5 to 1 risk to reward ratio, just using the first presented fair value gap on this day, right? And then, if you want to be greedy, which is something I do not recommend that you do, especially, if you're using real money, if you're trying to get funded with a prop firm, you really want to learn how to be disciplined. If the market gives you a 1 to 2, if it gives you a 1 to 3, learn how to take that money and just walk away, right? Take the first trade it gives you, walk away. But if you do decide to get greedy, you can catch another trade down here. You see we got some liquidity building up down here, right? Now, you guys can see I have a little bit of a purple box on my chart right here. Right, I have a purple box on this chart. This is a fair value gap on the 8 hour chart. So you see price started to use this fair value gap as support. I would have never trusted right off the first one, especially seeing that these little 1 minute order blocks are right here. Typically when you see this type of price action right here, right, and the market bounces up on the first try, it's going to at least break through this one. But whenever you see these two little order blocks that's like that, expect this one to be broken through, and then this one is going to have some type of reaction, right? It's not going to always give you the biggest move, but you can take this as a little scalp, right? And then this trade will look something like this, right? And this is if you really want to, you know, take this trade. Obviously, you know, let's say you don't get in at the perfect entry. Let's say you get in a little bit lower, all the way down here, and maybe you was worried. You was worried you were going to get stopped out. But let's say, you know, you had this little low down here that you was trying to target, right? Maybe if it freaks you out when it go all the way down here, it pops up, but eventually it hits your target. Even this trade right here is a 4-to-1 risk to reward ratio, right? I'm showing you this to show you guys the potential that's in the market, right? So when you're doing a prop firm challenge, so many of you guys are like driving yourself crazy trying to take a million different trade ideas every day, right? I'm showing you multiple trade ideas to let you know all you need is one of them. You don't need to catch every trade idea. You're going to drive yourself crazy. You're going to end up taking losses, and you're probably going to eventually blow your account because of emotions, right? You want to just be able to find one of these trade ideas and run with it, right? Pretty much rob the NASDAQ and then walk away. That's pretty much what you want to do. Right? So you could have taken that sell, and then once you see these two little areas right here get swept, this liquidity sweep on a 1 minute time frame, this is a really fast moving candle right here. This candle moves so fast that it left the fair value gap completely open, right? And this, I will use this as a breakaway gap, right? So that means if I'm trying to find a buy somewhere in here, I will put my stop loss right in here like this. All right, so I will put my stop loss right at the top of this breakaway gap. If you want to be safe, you can put it at the bottom of the breakaway gap. Right, obviously it would have been real hard to get in on this wick, but essentially you would have wanted to get in somewhere as the market pulled back, right? You probably would have never caught this entry right there, realistically. So I'm going to push this all the way up because we know that you probably would have never caught that perfect entry. But then right here, let's say if you want to go for a 2-to-1 again, maybe you want to go for a 3-to-1. I only try to go for 3-to-1 risk to reward ratios. Right, so 3-to-1 would have been all the way up here. The market don't give it to you, but it gives you just about another 3-to-1 going into the afternoon session on that Tuesday, right? So Tuesday had gave out some pretty good price action. You don't have to be there to catch it all. Right, you really don't have to be there to catch everything. But Tuesday really did give out some amazing price action. All right, now let's jump back into our hourly chart. All right, now I'm going to put my vertical line on Wednesday. We're on the hourly chart, Wednesday at 8 a.m. so I can know where I'm at. Okay. So as you can see, Wednesday was kind of like a continuation day because we swept this liquidity on the 1 hour, right? These two candles rejected after sweeping this liquidity, right? Then these two candles on the 1 hour pretty much tested these wicks. These wicks held them down, and then price started to just continue going to the downside, going into Wednesday, right? Sweeping some liquidity right here, right? Sweeping liquidity here, here, Wednesday was a continuation to sweep some liquidity. Now, if we go into the 1 minute time frame, that is where we can see what would have been the potential trade idea for Wednesday. Okay, so now we're looking at Wednesday price action right here. Here we go. All right, so I'm going to put this right on the 929 candle. As you guys can see, our first presented fair value gap from January the 14th. All right, this is why I always tell y'all to leave the first presented fair value gap on the chart. You guys have to leave these PD arrays on your chart, right? The market is going to always go back and use these things over and over again. All right, so at market open right here at 9:30. Our first presented fair value gap would have been right here, but we don't have to mark it out because it's literally in the same spot as our first presented fair value gap from the previous day. So we don't have to mark that out, right? So we just pretty much waiting for the first 30 minutes of the day to see what the market wants to do. The market goes up here, sweep some equal highs up here. All right, sweep some equal highs, and then we start to reject. All right, so once I see this, I would set my stop loss up like this. All right, I would try to use maybe the top of that wick, that candle right there. All right, I will use the top of that wick right there off that fair value gap. Maybe try to get my first entry somewhere up in there, and then go for a 3-to-1 risk to reward ratio. All right, at bare minimum, at least a 3-to-1. And as you guys can see, just using the silver bullet, we respected this first presented fair value gap right here. All right, this is the 1 minute chart. It did get a little choppy for like maybe 5 minutes. But if you had your stop loss up here, there was nothing to worry about. All right, you have to have a really good stop loss. Even if you would have put it up here just to be more safe, that's okay. But I like to have good risk to reward ratios. So I would have used that stop loss. And then I would have just continued to read price. You guys can see how the market started to respect that first presented fair value gap, sold off, right? Then we had the first presented fair value gap from December the 31st. We came back up here, retested that, sold off again. And then it gives you the 3-to-1 risk to reward ratio, right? Gives you that really fast. Your trade would have been done before 10 a.m. But if you're the type of person that, you don't always move quick when the market open, there's still opportunity. You just have to wait, right? But I don't really like this price action right here. After, we sweep some liquidity on the upside. If we look to the left, what did we really target over here? Well, we targeted those areas of liquidity that I was telling you all about. And then once the market swept that liquidity, right, it started to reject a little bit. So it started to reject, comes back up here, take out some sellers who didn't take profits, and then had a continuation. So I would have, this right here would have been really hard for me to trade, mainly because there's a breakaway gap in here, right? We just came all the way back up here and created all of these inversion fair value gaps right there, right? So this would have been pretty hard for me to really trade. I would have definitely have never taken this buy up, and I would have been a little bit too scared to take this sell on the way back down. So I would have missed that trade. I feel like the better trade was the one right in the morning when it just goes right down and give you a nice 3-to-1 risk to reward ratio. Right, so, I mean, I'm pretty much giving you guys my process. This is literally all I do every day. I'm just looking at, I'm waiting for the market to open. I'm seeing, hey, where's the liquidity? Days like this is super easy because we got these equal highs up here. Market sweeps that liquidity. And then we also had our targets right to the left of us on the hourly chart as well. We had targets to, you know, places that we can look to take profits at. So days like Wednesday are just beautiful days. Now Thursday is the day that I got smacked. All right, Thursday is the day I got absolutely demolished. All right, Thursday. I don't even want to go into the hourly on Thursday because this was Thursday's price action. Right, all of this chop right here, I got absolutely destroyed on this chop. And the reason being is because I'll take you guys to the daily and show you guys what I was thinking for Thursday. I was using the daily bias. Right, I was using the daily bias. So here's our Thursday. This green candle is the Thursday candle. So we started the day up here, right? So we swept this day. We swept this high right here on Wednesday, right? So if I mark this high out, I'll put a bubble on here. So when we drop into the 1 minute, y'all can see what I'm talking about. And then we could also put a line on top of this high right here. And then we can make this line, you know, let's just make it, I don't know, pink or something. So now that we drop back into the 1 minute time frame, as you can see, that's why I had to use the line, because this little bubble right here is too big. We're going to remove that. So our Thursday would have been right here. Right, this is around the time the market opened. And I'm not going to lie, you guys, I did over leverage just a little bit. Not really, but just a little bit, right? Whenever you take a max loss day on your prop firm accounts, you over leverage, all right? You just have to confess. You have to just call it for what it is. It never feels easy to admit it, but we all have been there before. You just have to live with it, all right? And be okay with that, right? So here we go. I'll put this vertical line on my 929 candle. So right here, when the market first opened and it dropped off, right? Notice how this, remember I said this pink line right here was the daily high. So we swept this, right? We swept this line and we didn't really get a displacement. So I didn't do anything initially. I didn't do anything initially until I seen this order block, right? On a 1 minute time frame. So I seen this 1 minute order block right here. And then I sold right off. I just sold as soon as it broke down. I was in profits for a little while. I got greedy. I'm not going to lie. I was in profits. I got greedy. And then the market reversed on me. I remember when it hit this right here and it rejected, I thought that I was going to be good to go. So I added into my trade. That's what I was trying to explain to you guys. Like I did over leverage, but I was reading price in real time. So at the time, I didn't really think I was over leveraging. I thought I was like getting ready to catch a really big move, right? But I was wrong, obviously, right? Because and in real time, I knew the market was going to reverse on me. And I'll show you why, because, Friday came around and I essentially took this exact same trade, y'all. I literally did the same thing, but I'm going to show you the difference in price. Right, so because once this candle right here closes, it's supposed to close really weak. And then the next candle right after it is supposed to be a follow-through candle. It's not supposed to be a green candle. It's supposed to keep going and be red candle, red candle, red candle. So once I started seeing these green candles on the 1 minute, I should have closed the trade almost immediately. But I'm not going to lie, I was emotional and I really wanted to get through my phase one on I think I was on phase two. I think I had just got through the phase one. So I really wanted to get through the phase two on my FTMO account. So I just held the trade and then I got stopped out, right? My trade had looked like this right here. Right, I had and I didn't have a perfect entry. I had probably got in somewhere all the way down here. I had my stop loss all the way up here, and I was going for like a 1 or 3 all the way down here somewhere. So I was in profits for a little while. Eventually, I got stopped out right there. All right, and even the way it stopped me out, I should have knew like this is going to be a horrible day. But after it stopped me, it went up, swept this liquidity. Then it created another little gap right here. So I knew that this gap was somewhat sketchy, but I decided to try it again. And I did the worst thing I could have possibly do because I thought that this was going to be a breakaway gap. So when the market was going down, I literally got in probably at the worst entry. And I had my stop loss like right here, thinking that this was going to be a breakaway gap and then it was going to be a continuation. But as you guys can see, it wasn't. I got stopped out again, right? And that was pretty much the only 2 trades that I took for a Thursday, and I pretty much was down like 4% on all of my accounts. So that was a pretty horrible day. Then we can fast forward to Friday, right? Now Friday was pretty much the same price action. All right, Friday was pretty much the same price action. Now notice how on Friday, when we go up here and sweep this liquidity, I literally took the exact same type of setup, y'all. If y'all think about what we just seen on the 1 minute, right? We swept liquidity, we started to break down. As soon as I seen these 2 order blocks getting created, I kind of already knew that the market was getting ready to fall off. But what I typically like to do is I don't like to predict order blocks, right? So I want to see a candle close below, right? I want to see a candle close below this area right here, because if this is a bullish order block, or I'm sorry, if this is a bearish order block, right? We want to see a candle close below here so we can use the top of this for a stop loss, right? So I waited for this candle to close right here. This is the trade that I posted on my short, you guys, the $9,000 trade, where I made the 9,000 on my phase one with Alpha Capital, right? This is that trade that I posted for you guys. So you guys, if you go look at that video on my shorts, you guys will notice that the price action is literally the exact same. I mean, not the price action, but the candles look exactly like this, right? You can go look at that trade. So the only thing I did right here was pretty much I waited for a candle to close below, and then I pretty much got in immediately. I had my stop loss right here on top of this this order block, and I pretty much just rode that baby down, right? As much as I could ride it. Then you guys will see on the video, as the price was going down, I moved my stop loss right here, right? And then that's where I got stopped out on the video. But I moved my stop loss too fast, right? I could have literally completed the phase one on all of my accounts, on all of my phase one accounts, if I would have just never moved the stop loss too soon. I'm going to show you why I moved it too fast, because on the 5-minute chart, right, sometimes when I'm trailing my stop losses, I trail on the 1 minute, but sometimes it can be safer to trail it on the 5-minute chart. And I'm going to show you guys why, right? Because if you were to trail this on a, remember, I put my stop loss right here. If you were to trail this on a 5-minute time frame and put your stop loss right here, because this is going to be a breakaway gap, right? Even this is somewhat like a breakaway gap, but this one for sure should be a breakaway gap. So if I were to just put my stop loss in there, I would have avoided being stopped out so early, and then I would have been able to continue to ride this trade all the way down. Right? So I eventually did get back in this trade, and that is how I completed my phase two on my FTMO account. Right? I eventually did get back in, but that is not how I typically like to trade these type of setups. I prefer to be all the way in at the top and then just ride it all the way to the bottom. And you guys can see this trade gave out a nice almost 8-to-1 risk to reward ratio from the top, right? But I ended up having to get back in. And essentially what I did when I got back in, I just used the 5-minute time frame, right? So these two green candles is going to be an order block. So all I did, once I realized that the market was going to keep going down, right, I just got back in there, right? Use this right there, right? You take an entry somewhere, and then you try to go for 1 to 3 risk to reward ratio. It don't really give it, but right. So even if you get out too early, you can still get back in. All right. Obviously, I got stopped out the trade. You guys can see that on my short video. I got stopped out from trailing too aggressively, but that's just a jump for you guys. You know, when you're trailing, your stop losses sometimes, you know, if you want to be extra safe, use the 1-minute time frame. But the 5-minute time frame is really safe as well, right? Because, you know, that's just something that's really important if you guys really want to be able to, like, not only find those good trades, but be able to like hold them and like capitalize on them, and be able to ride it for the full move, you guys. So that is pretty much what happened this week, you guys. I really didn't overtrade. I think I did a really good job this week. I managed my risks very well all throughout the week. It was only Friday. Not Friday. It was Thursday, man. I only took 2 trades, but I took 2 trades. I got too excited, and then I just got chopped up. So luckily, I was able to bounce back Friday and still have a green week, you guys. So, man, make sure y'all drop a like on the screen, man. I really do appreciate y'all for being here watching with me. If there's any charts that you guys want me to look at, feel free to leave a comment down below. We can look at some crypto charts. You know, crypto have been pretty much dead recently, but we can still look at some crypto charts. I'm still bearish on crypto right now. Obviously, you know, people have been wondering if Bitcoin is going to go back up, because it finally popped back into this zone that we've been talking about, right? This inversion fair value gap. I think this comes from the weekly time frame. Let me double check. All right, I've been calling out this zone, and I've been trying to tell people, you know, if you're like more of a day trader, this is the perfect time for you to get out before it continues to dump off, right? So I believe this maybe comes from the daily, but even right here, you guys can see this weekly fair value gap. It just pretty much popped back in here. Probably going to continue to go down. Yeah, this comes from the daily right here. Let me show y'all where this comes from. Where do this come from, the daily? Maybe it comes from the monthly time frame. Let's check out the monthly, because I know I really only use higher time frames for crypto, right? So this comes from the monthly time frame. You guys can see this was a fair value gap. Price broke below. So now this is going to simply be an inversion fair value gap, right? So we just touched the top of there, and now we're already starting to reject, right? So this is, you know, a good time to maybe get out of Bitcoin if you're not really holding it for extremely long term, because I do think Bitcoin is going to pull back. Right, and then where's Ethereum at? Right, Ethereum, somewhere in there, but I'm tired, you guys. I just wanted to come on here and go live, kick it with y'all for a split second. Just do some back testing on my strategy, try to help y'all out as much as I can. I hope y'all enjoyed this video. Make sure y'all drop a like, subscribe to my channel, no matter where you're watching from, whether it's Twitch, we're on Kick, we're on Facebook, we're on Instagram, and we're on YouTube as well, you guys. You can find me at the Trucking Trader. I don't go live every day because I am not a full-time trader just yet, so I'm always at work on the weekends. I'm sorry, on the weekdays, I'm typically at work. So when I'm working, I'm just trying to trade, get funded. You know, I'm not really even thinking about content that much, to be honest with you guys. When like throughout my week, I'm really just working on getting funded and trying to make some money. So, you know, but I'm always gonna come back and try to drop some content for you guys. So, you know, it's hard work trying to do this stuff, man. So if y'all can leave a comment, drop a like, let me know if I'm doing good. Let me know what videos you guys want me to make. That would be a great service to me, you guys. So, you know, I appreciate you guys for watching, and I am going to get out of here. I will see y'all the next time, man. Peace out.